Okay, I'd like to take this opportunity to welcome Bridgette Triandafilidis, who is the Principal of Accountants Who Communicate, with over 40 years of hands-on experience in the financial services industry, including over 32 years as a registered tax agent. Tax agent. Bridgette Triandafilidis assists this opportunity to welcome Bridgette Triandafilidis. Start again. Bridgette Triandafilidis has over 40 years experience with hands-on in the financial services industry. She's been over 32 years registered as a tax agent and assists a diverse range of clients, sharing her knowledge and passion for business. Bridgette provides support to facilitate learning and nurture understanding of tax compliance concepts. Over to you, Bridgette.
Well, hello everyone. It's great to be here. I know quite a few of you in the room, so we'll see what I can impart on you. It sounds like quite a simple topic, but to let you know, the presentation is just general in nature, so there is no tax advice being given here. If I do give any examples, they're just to illustrate, for illustration and discussion purposes only. I think once we start going through this, I've included a couple of links and I can email them out to you so you can actually click on them. I think it's actually worthwhile going through and doing a bit of light reading. So this link actually links through to 55 pages, but it is quite interesting. So the purpose of going through here is to raise awareness of the implications of running a home-based business and what records you need to maintain and how specific things need to be. So one of the first things that I would say is if your business is earning less than $75,000, there's actually no obligation for you to be registered for GST. However, you might choose to be registered for GST because you may have expenses that have GST on them. So then you might want to do that. So just flag that as something that you might want to have a chat with your accountant about, whether or not your GST registration status is working for your business. The other things that you need to look at with assessable income is you need to look at whether your income is coming directly into your bank, whether it's going through PayPal, and also this other little thing called cash. So I do say to everyone, if you are earning cash, you need to record that through your bookkeeping system. One way that you can do that, often you pick up cash, you put it in your pocket. What I recommend people do is that from their personal account, they transfer money into their business account and just write on it cash received. And then that way it's always going to be recorded. And when you're looking back and seeing how profitable your business is, you're actually working with real numbers and you don't have to guess, well, how much cash did I earn? If you put it in the bank in some form, then at least it can be recorded. When we're looking at having bank accounts for business and bank accounts for personal, as an accountant, I do sometimes get people lump everything all into the one account. I really don't care how often people go to McDonald's. I don't care where they spend their money. I only want to see their business stuff. So one top tip, if you don't have a business account purely for business, set one up, because accountants don't really want to see all of this other stuff that's going on. Another thing when we're talking about expenses, just because you've bought something for a business doesn't mean that it's tax deductible. And I'll give you an example of that. There's a way that you might like to be dressed or you might like to appear, and you go and buy a dress specifically for giving presentations, for example. Doing that doesn't mean that that dress then becomes tax deductible, even though you bought it specifically for a purpose. The fact that you can wear that dress privately or that suit or outfit privately means that it's no longer tax deductible. So even if I had one lady say to me that she had an argument with her accountant because her brand colour was blue and she dyed her hair blue, and she wanted to claim the cost of her hairdresser for dyeing her hair blue. And I said to her, I actually agree with your accountant. It's your choice to dye your hair blue. It's got nothing to do with branding. So, just because you do something for business doesn't mean it's automatically tax deductible. You go out and have lunch with someone, it doesn't mean that lunch is automatically tax deductible. In order to claim those things as a tax deduction, you do need to keep really strong records to support why that's business related. So with that first link, I thoroughly recommend taking the time to look at that and go through all of that just to make sure what you're looking at. But 101, set up a bank account. The next link, which is for home-based businesses, there's a great video from the ATO which will go through and help you understand being a home-based business. One of the biggest things I need to warn you of being a home-based business is that if you want to claim the maximum amount of deductions that you're entitled to, it may actually trigger a capital gains tax event on your property. So a lot of people understand that capital gains tax on an investment property, if you buy a property, rent it out and then sell it, you've got to pay capital gains tax. And a lot of people understand that if you live in your own house and you sell it, you don't have to pay capital gains tax. That comes with a little asterisk. If you're using your home as a home-based business, the way you claim your expenses in your home-based business may actually trigger a capital gains tax event. So if you're doing that, I'd have a chat with your accountant about that to see whether or not you've tripped over those things. The other kind of expenses that you can claim as a home-based business, your car expenses. You know, it's really important to maintain a logbook so that you can justify the amount of motor vehicle use you're using, which is business related. This is a common one, and this again is where the tripping over comes in with the capital gains tax, is with home office expenses. So you can have a set rate per kilometre, a set rate per hour for using your home office. That covers electricity, gas, stationery, computer consumables, internet and telephone. So that's already included. So you can't claim those other things as well. So I'll have that link available so that you can go through and have, this one's only 3 pages long, so that's a bit easier. Something else to have on your radar as businesses is tax deductions for assets. So this year is the last year that the ATO are allowing 100% back on asset purchases. So if you've got any assets that you need to purchase for your business, you'll get a better tax deduction if you buy it before the 30th of June than if you buy it after the 30th of June. So that's there. And lastly, maintain all of your records for a minimum of 5 years. I recommend 7. And I think I've wrapped that up in 10 minutes. I could go for a lot longer.
Thank you so much. And if people want to work with you?
Yes, so I don't have to be your tax accountant for me to have a consultation with you, but I'm happy to have a consultation and tease out some things that you might be interested in. I've also got Grasshopper Tribe, which after the 30th of June, there's going to be a full schedule of online covering topics like this, but explored in more detail and more discussion around those.
Great. Thank you.